Hi, Dan Paladin, bringing you another episode of the Mortgage Morsel on this Friday, May 23rd. Long weekend ahead. Hopefully everybody has a good time and safe, of course. This week I want to talk about this is Long Beach as far as market data, and it's going to be similar to other areas, but the part I want to point out here is this price decrease, about 37%. So let's just say in general, in probably almost area in our local Southern California area, it's probably 30%, 30% price reductions of off list price. So we can see the market has been shifting with that amount of price decreases. But let's get into what it's not solving. And I've touched on this previously, and that is affordability. So here I've taken an example or a sample listing of 1.4 million, and the down payment is going to be 20% across the board on these four scenarios. And I'm going to show you why price decreases, unless it wasn't priced properly, is probably not the best way to go to help a buyer and the seller. Again, I'm going to repeat, assuming it's priced correctly. A price decrease could be warranted because somebody's trying to reach for the moon and being unrealistic. So here we go. 1.4, this is the standard list price here in this first column. 1.4, 20% down. 1.120 is the loan standard rate as of today is 6.875, and total payment including taxes and insurance just over $9,100 or just under 92, whichever way you want to look at that. Cash to close 319. Okay, so let's take that scenario. Let's just take I'm using an arbitrary number. Let's just take 40K. We could use 50, 70, whatever. I'm just using 40. So here we go. 1.360 is the purchase price, 20% down. There's your loan amount. It's still a 30-year fixed, same rate. And then, we've got what, a couple $100 in payment relief and total payment, including taxes and insurance. So just, basic couple $100 in payment relief. So, and cost cash to close 310. Okay. So now let's compare that to an appropriately priced property at 1.4, taking a permanent buy down, and our 20% down is again the same as in column one. We're going to get that rate down to just under 6%. This is the buy down cost in points that the seller would be paying versus taking that price reduction and just giving it to the buyer that way. And look what we get on the payment. We have 6,700 in this principal and interest only versus the 71. So 85 versus the 89. What we're creating is more affordability. Cash to close is 318, very similar to column one. Okay. Also, let me point out that option 3 here, that also helps a 1.2 buyer step up to make a purchase at 1.4. Let that sink in for a minute. I just now took a 1.2 buyer and got them into a 1.4 purchase transaction with this same strategy. How about that? Again, so you accomplish more under this scenario. So now let's look at the one final option here at 4 is to get this same payment at 5.99 with the standard rate of 6.875, you'd have to drop the price over $100,000 to get the same payment as option 3. 8523 in option 3, 8517 option 4. So you'd have to actually drop the price over $100,000 to accomplish the same thing. So again, price reduction or rate reduction? You tell me which is better. I think your seller comes out ahead and the buyer comes out ahead versus just a price drop. So if you have any questions on this strategy and how we can go deeper with this, feel free to reach out to me. Again, make it a great weekend. It is Memorial Weekend. Stay safe. And we will see you next time on the Mortgage Morsel.